What's up, everybody? Nate here, and there is a three-part perfect storm brewing in our economy right now that is basically screwing over Americans' finances. In June of this year, 61% of Americans reported that they are living paycheck to paycheck, and if you just think that's the bottom 99%, you are wrong. People making over $200,000 and $300,000 and $400,000 a year are also living paycheck to paycheck. What's even worse is 25% of Americans have $0 in their savings account right now, so they are one financial emergency away from a disaster. So today I want to talk about the three things going on in our economy and in our country right now that are causing Americans all of these problems today, and what this is all going to mean for the future of our nation. Now, the first thing I want to talk about is household debt. So in Q2 2022, household debt in the United States grew to $16 trillion. That is a new record, and most of that money comes from brand new mortgages. Over the last 2 years, mortgages have exploded because of low interest rates and stimulus. So a lot of Americans went out and bought homes, but now they are heavily in debt. That could be a problem in 2022. Not only that, but credit card debt is going up in the United States, which is also an issue considering the Federal Reserve is starting to raise its interest rates. Now let's kind of break all of this down. So a lot of Americans bought houses in 2021, and buying a home in general is not a problem, but you have to be able to make sure that you can afford that home. And now a lot of Americans in 2022 are not sure that they're going to be able to afford that home. There are a lot of costs associated with owning a home. You've got insurance and you've got taxes. Trust me, I know, because I got a tax bill this year and my taxes went way up for my house, and same with my insurance. Now, over the last 2 years, this hasn't really been a problem, but because in 2022, property values have gone way up, well, a lot of Americans are getting hit with a much higher tax bill. As the houses around you sell for much higher, and as you have a lot more valuable of a home, well, now you have to insure a much more valuable home, and your property taxes go up because all of the homes around you cost a lot more. Your area is desirable, and the United States government wants a piece of that. So the more valuable your house is, the more taxes you pay on it, and that is a problem in 2022 because Americans simply just don't have the cash. Wages have gone up year over year by around 5 to 7%, but in July 2022, inflation hit an over 40-year high of 9.1%. So even though businesses are paying their people more, people are still getting a pay cut. That simply means that they're not able to buy as much. So Americans are having to choose right now, pay their mortgage or pay for groceries. I want to kind of clear something up right off the bat. This situation is very different than what we saw in the 2007-2008 housing market crash. They were basically giving out loans to anybody that wanted them back then. You didn't have to prove your employment history. You didn't have to prove if you had any money. You didn't have to prove anything. You basically just went to your bank and asked for a mortgage, and they gave you one. However, in 2022 and over the last couple of years, it is very much different. You have to actually prove that you can pay this loan back, and you have to go through so many different checks and balances in order to ensure that. So for the most part, most Americans are able to afford the homes that they bought, but the issue is we have inflation continuing to go up. Americans are going to have to continue to pay more for groceries and other bills, and their housing payment eventually is going to get put on the sidelines. Right now, foreclosures are rising in the United States, but you have to keep that in perspective. They were very low over the last 2 years, and we're just now getting back to where they were at pre-pandemic levels. They're not rising to an extreme point just yet, but they are starting to go up. Most of that is because of mortgage forbearance ending, and of course stimulus ending too, but Americans in general have to keep an eye out for this because things are getting a lot more expensive. Not only that, but the one thing that a lot of Americans turn to in times of trouble is their credit cards. Credit card debt is going up too because Americans just don't have the money to buy the things that they want or buy the things that they need. The Federal Reserve of the United States is raising its interest rates, and a lot of credit cards, actually most of them, come with an adjustable rate interest rate. That means that as the Federal Reserve makes borrowing money a lot harder for banks and financial institutions, they are going to raise that interest rate on you every single month, and this could get well over 20 and 30%. All of that debt you have on a credit card is getting a whole lot more expensive, meaning every single time you turn to it in times of trouble or just to buy the things that you want, well, now you're putting yourself further into debt. We don't know what's going to happen with the future of our economy. We don't know if the entire United States is going to be in a recession. We don't know how high inflation is going to get. So with that being said, many Americans do not have any extra income, and if incomes don't rise, now we will start to see foreclosures and we will start to see people going into bankruptcy because of credit card debt. They just don't have the money in order to buy anything because everything is so expensive. Not only that, but remember what I mentioned at the beginning of this video, 25% of Americans have nothing in their savings account, so they can't turn to a credit card, they can't turn to their savings, so if they have bills coming up, what exactly are they going to do? Now, the second thing that is screwing over 61% of Americans in 2022 is the jobs market. I kind of mentioned before that Americans have a lot of this debt, but what is going to compound that is if we see a massive unemployment crisis in the United States. The Federal Reserve has started to raise its interest rates, and that affects everyone in terms of what they can buy. It affects businesses, it affects Americans, and businesses especially need money to go out and grow and to pay their employees, and right now they're not getting any investor money because borrowing money is expensive, so they're not able to take on any debt. And at the same time, things are expensive, so people are not going out and buying as much, so businesses aren't seeing those sales, meaning they might start laying a lot of people off in 2022. Now, a lot of the layoffs that we've seen in 2022 are just residuals from 2021, so businesses hired way too many people in 2021, and now they're starting to cut their payrolls in order to make profits because they're not getting them from investors and they're not getting any money from sales. So they're trying to stay profitable, which means cutting their expenses, and in a lot of cases that means people. But if the Federal Reserve continues to get aggressive with their interest rates and makes it so businesses have no money whatsoever, well, they're still going to try to be profitable, meaning they might start cutting even more people, straight up firing. And we've already started to see lots of layoffs from your tech companies, and this might start to go into bigger companies as well, like Amazon and Alphabet. What that means is now Americans have all of this debt and no job on top of it, so most Americans get their income from their job, and if they don't have a job, they really can't pay their bills. They have nothing saved up either, so now no money is coming in, and that's going to hurt our economy in the future too, because now no money is going into the economy as well. No money's coming in and no money is going out. That could eventually hurt our GDP as well, meaning we could have even more quarters of economic shrinking and we would be in a deep recession. And the third and final reason why 61% of Americans are financially screwed in 2022 is because they are not investing. We have talked a lot about this on this channel before, but the only way to beat inflation is to actually invest your money. That's the only way that it's probably going to be able to grow faster than what the inflation rate is, and this is more important than ever when we have raging inflation in the United States. Every single day your money is losing buying power. That means you need to have more of it in order to buy all of the same things. At the start of 2020, we had $3 trillion in circulation. Now we have over 20 trillion. It's not a problem of printing more money, it's a problem of you figuring out ways that you can get a slice of that pie. One of the easiest and simplest ways to do that is to invest your money, whether it's in real estate or stocks or commodities or even cryptocurrency. And I know what you're thinking right now, all of those markets that you mentioned are essentially tanking, but this is the most important and best time for you to buy in history. Not just right now, but when the stock market is historically down, when these markets are down, well, typically it's because of other factors like the Federal Reserve raising interest rates or inflation, but it's not usually a lot of these businesses. A lot of these businesses are still really profitable and they have successful business models, but the problem is our economy and people aren't buying their products because there just isn't enough money for them. So you can essentially buy shares in a lot of these companies, shares of ownership at a discount. But the growing sentiment in the United States right now is a lot of people are looking at the stock market and saying exactly that. They don't want to buy in because things look like they're crashing and burning. But what I'm here to tell you is that this is the absolute best time to buy. Americans in a lot of ways are funny because they look at the stock market when it's really high and they say it's overvalued. I can't buy that. I'll be wasting my money. I'll wait till it goes down a little bit. But when it actually does come down and things are crashing, then they look at it and say, why would I buy right now? Things are crashing. The fact of the matter is, the sooner you start investing, the sooner your money can start compounding. You put money in and it continues to grow. All of the money that you initially put in gains interest, and then you keep putting more money in. That money gains interest, and soon all of your interest is gaining interest, and now all of your money is compounding and doubling over time. Yes, it will take a very long time, 30 to 40 years if you do it right, but the fact of the matter is, the longer you hold your money there, the more successful your money can be. And most Americans admit that they do not have any investments in 2022, so they don't have any savings. They're in debt and they're not making enough money from their job, and they might lose their job in 2022. And well, that's creating a perfect storm for Americans to not have any money whatsoever. But what I'm saying is, there is a way to get ahead. All throughout stock market history, we have seen a lot of crashes, but eventually the stock market has recovered to meet new record highs. It doesn't really matter what happens in the short term with your investments. It only matters at the end of your 30 to 40 year investing period. Doing this alone can beat a lot of all of these economic problems, and you're probably thinking, well, I don't have enough money to invest, but you can start investing literally with pennies on the dollar. A lot of these investing apps out there today, like M1 Finance and Robinhood, allow you to buy fractional shares, so you don't need thousands of dollars to buy Amazon. You just need a couple bucks here and there in order to start fractionally investing. You're going to buy a part of a share, not an entire share by itself, until you can finally afford that full share. And of course, investing is risky. I don't know if you're actually going to make money from investing. I'm not sure if you're ever going to see that return on investment ever again, but not investing is just as risky. I know today that if I take on a bunch of debt, if I have nothing in savings and no job, well, then I have nothing in this money-based economy. But there is a chance that I might be able to grow my money faster than a recession and faster than inflation if I start investing, and that to me is a risk worth taking. But now I want to hear from you on this issue. What do you think about these 3 things causing the perfect storm for Americans' finances in 2022? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.